What is Bitcoin? What are cryptocurrencies and how can I get them? And should I even invest in them? These are the questions that we will answer today. We're going to start with explaining what it is first. As with any investment, we need to know what we are investing in before we start spending our hard-earned money. First off, Bitcoin is a decentralized currency or cryptocurrency. To understand this, think of it like a bookkeeper tracking what comes in and what goes out. For Bitcoin, the same happens with every transaction that is made with the currency. But instead of it getting written in a single huge ledger, it is divided into smaller sections or blocks that are linked together as a chain, hence the term blockchain that you might have already heard. You can think of these blocks as sequels to a movie or a book series. The complete story will only make sense if you know what happened in the previous movies, or in this case, blocks. As transactions are being done, they are put into a queue, or in this case a block, that requires a complex algorithm to be solved by a computer before it can get executed. This process of solving the block is called mining, and the reward for doing this is that you get a few bitcoins in return. Because every transaction is linked together and multiple computers need to work together and validate that the answer is correct, it is very, very hard to cheat the system and put false information into this ledger. This makes it quite secure against hacking. And because there is no third party or middleman like a bank needed to perform the transaction, it is a decentralized currency. This also means that an entity like a central bank can't simply print more bitcoins like they can do with traditional currencies like the euro or dollar. Alright, so we have established that it is a form of currency that is relatively secure, that needs no middleman like a bank to process it, and it is immune to government interference like for example printing money. And you can even earn more by mining them yourself. And to top this all off, the total amount of bitcoins there can ever be is maxed out at 21 million. So there is a finite amount of bitcoins. Seems like a pretty sweet deal, right? Well, not exactly. There are a couple downsides. Bitcoin is part of the first generation of cryptocurrencies. In fact, the very first. What this means is that you can compare it a bit to the first cars. They get the job done, but consume a lot of fuel, their range is limited, and they are definitely not fast. And oh boy is Bitcoin slow. It fluctuates a bit, but a transaction can take anywhere between 10 to 12 minutes to process at the time of writing this video. And about 4 to 5 transactions are processed per second. To give some reference, Visa, for example, processes 1,700 transactions per second on average. And worse still, Bitcoin and other cryptocurrencies are highly volatile and fluctuate a lot in price, even between days or even hours. It wouldn't be very practical to buy a bread for 2 euros one day and 3 euros the next. So to use Bitcoin itself as a currency isn't exactly viable. Another downside is the energy consumption. Mining is done by extremely fast computers solving complex mathematical questions, and that naturally requires a lot of electricity. What this means in the case of Bitcoin is that the energy consumption is about the same as the consumption of nearly 5.5 million US households per year. This also means that in most cases today it is unviable to mine it yourself, since it requires really expensive hardware to do so in the first place, and you need access to cheap power if you even want to make a profit. This is also why today over 65% of all mining is done in China, since in certain areas electricity is quite cheap there. So then we have the answer to the question of the video, whether or not you should invest in it. Well, here it gets tricky. If you want to invest in it because you think it could be used as a great currency, then the answer is hell no. However, it does share a lot of traits with gold. Gold gets dug out of the ground, melted into bars and put into a vault, which also costs a great deal of energy and time to do so, and it is also still considered an investment. Also, since Bitcoin was the first cryptocurrency, you will notice if you look at the price chart of other cryptocurrencies that those mimic the price movements of Bitcoin. Whether you like it or not, Bitcoin at the moment is still the dominant currency in the crypto market, and this probably isn't going to change anytime soon. So basically, if you think it is the new digital gold, have fun and invest some of your money into the coin. However, if you are in it for the technology prospect it provides, there are a lot of better alternatives. And here it gets really interesting. Today, there are hundreds of different cryptocurrencies out there that are improving on the concept of Bitcoin. Some cryptocurrencies are gathered differently and require less energy-intensive processing to get. Some improve on the concept of the currency aspect in some way, like making sure that a lot more transactions can be processed, or that the currency is completely anonymous in its use, so that when you spend your coins, no one can trace them back to you, which can obviously be used for more questionable transactions. Yet, other cryptocurrencies, for example, are working towards digitalizing assets. For example, storing the supply chain of a company inside of a blockchain. As a car manufacturing company, you could check a faulty batch of bolts, for example, and recall all the finished cars that have those bolts in them simply by checking the blockchain. Other cryptocurrencies are working towards smart contracts, which, for example, could mean that I could get a loan from another person without requiring legal paperwork, since it is written in the blockchain. There are other applications out there, but there are too many to discuss even in multiple videos. So if you are interested in the future possible use cases of blockchain technology, then it is best you do your own research and see what projects interest you the most. Either way, when choosing one of these alternative cryptocurrencies, or more commonly referred to as altcoins, there is one big thing you need to look out for. Look for cryptocurrencies with a solid development team behind them. This means that there are people actively working on creating a better product, and the chances of the coin succeeding in the end is higher, which of course in turn means a higher return for you as an investor. Compare it to a new car manufacturer, for example. If they say they will build you a new car for a good price, but don't have any mechanics or engineers on board to build it, you would be wise to run the other way as well. A great example of this in the cryptocurrency world is the whole BitConnect fiasco. In case you are out of the loop, they basically had a large marketing and sales department with no development team and scammed a lot of people out of their hard-earned money. So now we get to the part on how to get them. Since mining isn't profitable in most cases, it is best for the average person like you and me to just buy them. And this is actually fairly easy to do these days. The only thing you need to do is sign up to a reputable crypto exchange and follow the steps on their website to buy some. Personally, I use Binance and Coinbase myself, so feel free to use those. I will leave links below. I'm not affiliated in any way, so use them or don't. I personally don't really care. On exchanges like these, you can use classic or fiat currencies, as they are called in the crypto community, like dollars and euros for example, and exchange them for cryptocurrencies. As soon as you have some in your portfolio, the only thing you need to do is deciding on where to store them. As with traditional money, you will store them in a wallet. For this, there are quite a few options available. You have a software wallet, one you can download on your PC, a hardware wallet, a dedicated sort of USB stick you can use, or simply leave them in the wallet of your exchange. Each has its advantages and disadvantages. The hardware and software wallets are the most secure, but if you lose your password, all of your coins are lost forever. With a hardware wallet, you also have the upfront money cost since you have to buy those. The downside of an exchange, on the other hand, is that it can be hacked. This has happened to other exchanges in the past, but so far Binance seems to be one of the best exchanges that is protected against this, even though people have tried. I can't really say much more, it just boils down to personal preference. Again, do your own research and see what is most beneficial to you in your situation. To summarize this video, invest in Bitcoin if you have some money to spare, want to dabble a little with a highly volatile and risky investment, and you can afford to lose the money entirely, and you think it is going to be the next form of gold. Invest in altcoins or alternative currencies for the same reason, minus the gold part, but you are on board with the potential of a specific project idea and project team. You shouldn't invest in cryptocurrencies at all if you cannot miss the money and if you hate seeing your portfolio go up 20% one day and halved the next week. Also, don't invest in it if you don't believe in the technology or understand it at all. You really need to know what you are investing in, because investing without research is gambling. Thank you so much for watching. Don't forget to like and subscribe, and I hope to see you next time.